in so-called realized investment projects, most of which have relocated from China. Rodolfo said he does not want to position the Philippines as an alternative to China, but rather as a complementary site for businesses in China to help them cope with the Washington-Beijing trade row. The Philippines is targeting 135 foreign companies in its industry promotion strategy. This includes 64 China-based companies affected by the trade war and 16 Wuhan-based companies affected by the pandemic. The American Chamber of Commerce of the Philippines said businesses have prioritized their response to the pandemic, which explains their delayed expansion plans. Checking in on markets today, let's open my Bloomberg terminal together. You can actually see us opening in the red here. We are sliding to 5560.83. We had actually, we were towards our way back to 5,600 levels yesterday, but take a look at that, opening down 0.8% on this last trading day of the week. Now, we actually climbed for a third straight day yesterday. So from Tuesday to Thursday, and yesterday we were up by 0.4%. Now, why the rally yesterday? A lot of analysts had said this was on the optimism after the government had announced that they were warming their stance on the PPP. So they said that they were open to solicited proposals. This from PhilStocks' Claire Alviar said, she said that while the Philippines has yet to flatten the curve, at least the pandemic curve, and there's still worries of a second wave, the government seems to be more open to working with the private sector. But still, it's worth noting that the value turnovers are remaining very thin. So volumes at 4.7 billion pesos worth of trades, and still net foreign selling persisting for a 12th straight day. We lost around 122 million pesos net from our foreign buyers here. Now, Chris Mangon of AAA Equities is seeing even more pain, at least for today. He's saying that the main index is currently up for the week around 1%, but still it could go either way. He says that investors may be closing their positions today. Recall that there will be a holiday and there's no trading on Monday, so we might actually see a bit of a pullback as we are seeing already early in the trading day. Now, First Metro Securities also expecting sideways trading this morning, given some offshore indicators. They also say that investors will continue to watch the first quarter earnings that have been pouring in, saying that as of now, a lot have largely missed to the downside so far. Now, let's take a quick peek at our sectors here and whether we can actually see any bright spots. Unfortunately not. All sectors are in the red. Save for mining and oil, that is flat. But you can see financials leading those declines and pulling down the index. That's down by 1.2%. Holding firms, which had actually rallied yesterday, also not doing very well, or again, maybe some profit taking happening here. Now, let's break some earnings. Now, speaking of earnings, we were actually looking at SM because of the fact that there was the SM Prime had released their earnings. Now, you've got the parent company releasing their earnings. And again, not surprising is the fact that they were hit by the pandemic. The first quarter net income down 16% to 9 billion pesos. Take a look at your screens here. What dragged down SMIC? So the revenues were down 2% to 111 billion pesos. But you can see that BDO and the China banking arm were actually both down double digits from between 10 BDO down double digits to 10%, even as China Bank actually surged by 19%. SM Prime was also down by 5%. We had reported that earlier on, but take a look at their retail arm. The retail arm has slid by 56% just in the first quarter to 1.2 billion pesos worth of income. Now, First Metro says this was actually below the target that they were hoping for, but was actually in line with consensus estimates. Another thing that First Metro is pointing out here is that before, the property, banking, and retail contributed 38%, 43%, and 19%. So close to 20% was retail. In the first quarter of 2020, only 10% was from the retail arm. So really a huge hit. Of course, they had been closing their malls, and 47%, of their mall revenue and that fell 16%, even as the residential arm actually grew 23%. You can see SM investments here opening in the red. That is down by 1.3% to 824 pesos. Another one that I want to parse through, this had actually come out yesterday during the trading day, but I want to give some more details on PhilInvest Land, because again, property players have been in focus. They are, of course, the office operators, the mall operators here. Now, take a look at your screens here. PhilInvest income also falling in the first quarter. The revenues were down by 28% to 5.15 billion pesos. That's on the back of the net income actually, slumping by 25%. Rental revenues, even as they were up by 4%. The real estate revenues fell 39%. So they did mention lower sales take-up, delays in project completion, but still they did mention that the rental revenues are slightly offsetting the decline in retail mall revenues. They also mentioned they will be prioritizing projects already under construction. They have given a grace period to some of their home buyers to help with their ongoing pandemic, and they have earmarked 16 billion pesos for capex this year. As it happens, as I mentioned, PhilInvest also in the red, down by 1%. One that I want to check in on is also Meralco, just for the fact that they have been in the news as of late. A lot of issues regarding the billing statements of Meralco and whether they are overcharging customers. What have they recently said? They will be refunding the convenience fee. So there's a 47 peso convenience fee that we as Meralco customers pay when we settle our bills through an online payment app of Meralco during the ECQ. And the company explained that this app goes through a payment gateway from PayMaya, which actually charges this 47 pesos per transaction, and it gets integrated. So they did mention they will be refunding that. This move comes after the DOE asked them to explain all of these hikes in their charges. Meralco down by 1% this morning. And finally, PAL, another one that has been in the news almost every day, really, with all of the cancellations and what the future is of this airline. They did mention, this has been quite obvious for PAL, a lot of revenue losses, but they say it's $300 million in revenue losses for every month not operating. This is their president and CEO, Lucio Tan, speaking on AMC yesterday. They mentioned that the total pandemic losses for PAL are now topping $1 billion, but they did mention they are not in immediate danger of getting bankrupt after Tan had actually put in half of the $600 million equity infusion. So he did put in money and liquidity. He said that without this liquidity, Philippine Airlines would not be here anymore. They're also having some, light at the end of the tunnel, saying it seems that the government is willing to support them. They will be restructuring their costs, but they do mention demand probably not going to recover for about 2 to 3 years. They also say there's a likelihood that they will have too many employees, but they will not be firing them during the pandemic, saying this would be inhuman. In terms of whether the flights will be resuming, they say 20 to 30% of domestic flights will be resuming, and 5 to 10% of international flights by the month of June. So let's see whether Philippine Airlines can ramp up those flights in these very trying times. More markets later on in the broadcast. Meanwhile, let's check in on other headlines we're watching on this last trading day of the week. The Finance Department is now hoping for the quick passage of the 568 billion peso stimulus package bill and another measure which is allowing the transfer of banks' bad loans to asset management companies, or AMCs. So this is just before the Congress goes on recess, which is on June 5th. The proposed Philippine Economic Stimulus Act, or PEZA, comprises 10 House bills aiming to boost the economy as it recovers from the COVID-19 crisis. This involves the CREATE bill, which was previously called SITIRA, which is now pending at the second level in Senate. The Financial Institution Strategic Transfer Bill, meanwhile, was approved at the House Committee level last week. This seeks to provide the regulatory framework for the transfer of non-performing loans to AMCs to keep the bank balance sheets healthy and afloat amid instances of an economic downturn. The DOF also says taxing the digital economy could secure up to 17 billion pesos in fresh VAT revenue in the first year of implementation alone. Finance Chief Sonny Dominguez told the lawmakers that the DOF and the BIR are currently studying how to collect taxes from online services to plug potential VAT leakages. House Ways and Means Chairman and Albay Representative Joey Salceda has already filed a measure in the lower house seeking to impose a 12% VAT on the ads, subscriptions, and transactions made through e-commerce platforms. Inflation, as experienced by the low-income families, accelerated in April. That's amid the lockdown policies due to the COVID-19 pandemic. The inflation rate for the country's bottom 30% households clocked in at 2.9%. That's faster than the month of March. Headline inflation slowed to 2.2% for the average household in April. Community lockdown measures have been placed in several parts of Luzon since mid-March. Now, while the government has prepared cash subsidies for 18 million low-income families affected by the quarantine protocols, problems in distribution have since been reported. Food and non-alcoholic beverages picked up in April for the bottom 30% households, with fruits and vegetables posting the biggest inflation uptick. And the study shows that only 20% of the Filipino population will be unbanked by 2025. That's a huge decline from the almost 70% currently that have yet to open accounts in financial institutions. This report, entitled FinTech and Digital Banking 2025 Asia Pacific, was made by software and market research firm International Data Corporation. The IDC noted in the report that fintechs, or financial technology firms, will help fill the inclusion gap in the Philippines. An official from a fintech company also noted that restrictions caused by the COVID-19 pandemic opened up opportunities for the fintech sector as more businesses are looking to digitize to keep operations moving. Meanwhile, in a bid to safeguard the financial system, BSP Governor Ben Diokno said the proposed FIST, or Financial Institutions Strategic Transfer Law, could come in handy. The House bill proposes the transfer of the bank's bad loans to AMCs to keep bank balance sheets healthy, allowing them to lend more. For now, though, Diokno says non-performing loans, or NPLs, remain low, and the FIST law should be enacted only if the health crisis worsens and if banks encounter the worst-case scenario. Working from home has received mixed reviews. Some are adjusting, some are impatient for all of this to end. To what extent should we be embracing it? And how secure is it really? Here to share his thoughts with us, we have with us live from Singapore, Kamal Brar. He's the Vice President and General Manager for Asia Pacific and Japan at Rubrik. Good morning, Kamal, and thank you for joining the broadcast.
Hey, Danielle. Thank you for having me.
Let's kick off with this whole work from home setup. It sounds great in theory. A lot of people have been wanting to work from home, but now the reality is here. And there's a lot of issues that are coming into light because of this new reality. Is this something that you are seeing is sustainable? Is this an alternative, a good alternative to the traditional methods of going to offices? Should we simply be making the office spaces more secure for an onset of a pandemic like this? What is the future here?
Yeah, look, I think across ASEAN, every country's taken a slightly different approach, but across the board, I think it's fair to say that companies and organizations do need to assess on how they can provide their services without impacting the quality of their services. So I think today still many of our banks across the region are still working through processes they need to digitalize to be able to provide the quality of service. So it's not necessarily can we actually provide the remote capability for all employees, but it's more also can we provision those services to what our consumers and customers expect. So I think across the board in ASEAN, definitely in Singapore, there's a capability, and definitely across the more mature ASEAN countries, we've seen more of the uptake on the digital services being embraced by consumers and also by companies. But I think it's more challenging for the small, medium enterprises who don't have access to the technology, don't have access to the skills. And in many cases, I think you've alluded to earlier in your broadcast, they're still understanding how they can leverage payment systems in digital format. There's still an evolution that's taking place. So I think it's a really challenging scenario for the small and medium enterprise companies. For the larger enterprise organizations, I think they have the infrastructure, they have the technology, they also have the ability to pivot quickly. So I think in ASEAN, definitely we see the more mature markets like Singapore shifting quickly and looking at indefinite roles in telecommunicating, and that will just become the norm, the new norm. I think in Philippines, that's more challenging. I think the reality is, we still need to, I think last 3 months, you've seen people still need to go to the banks. They still need to provide access to systems which aren't secure from a remote standpoint. And so I think there's still an evolution of the technology and the platforms catching up to the current crisis. So in hindsight, it's given everyone really an ability to look at what is business continuity and service capability that we provide in the current crisis. And really that's an opportunity for some businesses and an area for them to improve.
Kamal, I mean, what is the timeline that you're now seeing here? Because in theory, everyone was working towards digitalization in some way or form, remote working in some way or form, and this pandemic simply accelerated that push. It's something that companies were starting to invest in, and now they're being pushed to accelerate those investments. Is this all premature? And like you said, will it be taking a while? Is this something that we shouldn't expect to happen anytime soon? Or did the pandemic really actually accelerate this? And will we be seeing a huge amount of change in the short term?
I think it depends on the type of organization and obviously the verticals. If you look at the banking sector, I think they already comply with most of the data privacy and regulatory requirements in terms of securing access to data and providing services in a secure manner. I think it's the smaller medium enterprises, retailer, for example, who's traditionally been very focused on a cash-based transaction, who now needs to look at digital payments and how do they pivot to digital payments? How do they provide those services in a digital platform? I think those are the ones who are going to find it more challenging and need more investment and more support to make that transition. So I think for them to survive, it's really a next 6 months, they're going to have to make some investments. I will tell you, customers who are leveraging our technologies are aggressively looking at how they can improve quality of service. Ultimately, what this crisis has taught us is there's really an area for not obviously improving service quality, but also business continuity, which is critical. Providing critical services which are important to citizens and consumers. It's given an opportunity for them to reflect on how they can continue in providing a BCP plan in this current climate. And so I think across the board, the timeline will vary. Some of the banks, for example, already doing it. They need to rapidly improve and be more proactive. And I think the small and medium enterprises are still very early. I mean, candidly, I think it'll be 6 to 12 months before we'll see transition. And unfortunately, it's having a dramatic impact on the economy. I mean, you've alluded to in your broadcast on the financial impact on that. And obviously, small, medium enterprises are a huge part of the cash economy.
Well, 6 to 12 months is not a bad deal. That's quicker than the vaccine might come in. Now, Kamal, you were speaking about banks. Is there a real possibility that everything can be remotely done in a bank? Because, during the pandemic, they have been one of the essential businesses and people have had to report to work because of the security threats and issues particular to the financial services sector. Will this ever really change? I mean, do we have the technology to keep things so secure that we can actually transition if the bank is actually ready to transition?
Yeah, I think there's 3 dimensions to it. One is the human dimension in training and educating employees to leverage more of digital tools and assets. The other piece, of course, relates to technology. I think most banks today have a vast amount of technology options they can look at in providing remote capability, securing their data access. I mean, the reality is today we're seeing a massive uptake in data breaches and ransomware attacks. Just in Singapore, in our organization, we've interviewed over 250 CTOs, CIOs, and they've all had ransomware attacks relating to data breaches. So, there's a massive uptake of that activity in the current climate, and it's been increasing. We're up at 220% year on year in Q1 alone. So I think the technology platform choices are there. It's about making sure they're secure and provide access to sensitive data in the requirements that were defined by the National Privacy Commission in the Philippines. I think the third piece to it, of course, is process. And there's still a lot of processes which are not automated and need to be automated to remove the dependency of physical presence. So, take, for example, a simple KYC process in a bank. not all banks have been able to make this an automated process, and there's still some manual interaction with some systems which are not available online. So I think it's really comes down to the three dimensions. One, educating the employees and the human aspects and making sure they do the job in a secure way, because now you introduce additional risk with them working remotely. Third being, process is very, very important. We need to automate that process to remove the interaction where possible in terms of physical interaction in branches and move more to online KYC. And then I guess the second one around technology, we have so many technology challenges to address, infrastructure alone, there are some limitations. So I think across the board, it's going to require a comprehensive effort for banks and other large organizations to actually do it.
Can you nuance this 220% spike in cyber attacks? I mean, is this something that comes out from, institutions that actually have pretty strong regulatory environment for data security? To what extent were these attacks, avoidable, or to what extent do we have the technology to address these attacks? That's scary, given that that's a global figure and it's possibly largely higher in an environment like the Philippines.
Well, even in the Philippines, you've seen some very significant data breaches recently, but globally, some of the largest organizations we're used to hearing, the Yahoos of the world, the Marriotts, they've all had ransomware or data breaches, which have been really a significant amount of concern. I think ultimately, with the current reality that we live in a digital world, we're going to see more and more uptake of these attacks and the opportunity for, unfortunately, people to take advantage of systems which are not secure and not protected. And data is obviously a very important asset to a business today. In any shape or form, we've seen more companies pay ransom to data which is now protected and secure. And so really, I think our customers' approach is moving from a reactive, which will be a high impact event. I mean, likelihood of being attacked is, in many organizations, perceived as a likelihood of a low probability. What we want to change is really move to a proactive model where we're actually planning for such events, and how do we actually improve and minimize the impact, because ultimately even the largest organizations globally are being attacked. And then I think in the Philippines, just recently, as last month, there's been some very, very significant leakage of confidential consumer data that's leaked out. And so I think fundamentally it's about a mindset approach, and then having the technology adoption in place to make sure you secure and protect that asset and information. And that's an area where we've seen an uptake. Customers are now being proactive, where traditionally in the last 2 months before COVID, they had a plan, they had a contingency, they had implementation of our technology, but they moved to a proactive model where they're looking at automation being key. They don't want to be always be physically involved in a certain process, but also looking at insights. How can we get better insights into where we have potential threats, and what do those threats look like, and how do we minimize the impact? Because once you're attacked, it's how quickly can you recover? And that's the challenge for most organizations. I mean, I think given the extent of our world of digital, it's really minimizing the impact of these attacks.
Kamal, last question. How effective has regulation been? Especially in the Philippines, if you can localize our regulatory environment when vis-a-vis these types of cyber attacks and security, and how well has it been implemented during this period, wherein this is the period it needs to really be enforced compared to other countries?
Yeah, look, I think the National Privacy Commission in Philippines has been very clear on its mandate and guidelines relating to sensitivity, protecting that sensitivity of data. Even down to the recent COVID, they've had new guidelines issued on how to treat sensitive patient data and making sure that data is accurate and obviously secured to avoid any leakage of that information, given the confidentiality. I think ultimately every organization in Philippines, every large enterprise organization has a obligation with the data officers to comply with the privacy laws and to regulatory requirements. Where it's challenged is every company is in different phase. We have some companies who obviously comply, but there are companies who have gone beyond. I mean, we have one of our customers who are now going beyond and saying, look, we want to proactively look at insights of our data and make sure we're ahead of the curve in terms of our potential data breach, looking at the type of information or data assets where they're securing certain large complex systems. How do they get better insights in those systems? And I think then you've got the other spectrum where certain businesses or certain organizations are still very early, and they are not very equipped with the technology skills And whilst they make every intent to try and comply to these requirements, they simply still aren't there. So I think it's a varying level of maturity, especially in the Philippines. I think it's an opportunity for all organizations to improve their impact in how they secure the data. I mean, that's a very important part of their business today.
Okay, so still a lot of challenges, but that is, of course, where most firms are headed towards in automation in terms of securing their data, especially during this pandemic. Thank you so much. That's Kamal Brar from Rubrik for joining us this morning.
Thank you.
Okay, guys, quick check on our markets here. Before I check in on our broad markets, I do want to break Del Monte. So we had Del Monte, one of the IPO hopefuls of the past, and now looking for other ways to raise money. They've actually just completed their share of sales in their Philippine unit for 6 billion pesos. So they sold that to a Singapore-based investor, C Diner, and they mentioned that this will now be helping them enter the ASEAN region. This is actually investing already in leading companies in the consumer sector in China and the ASEAN region. So they mentioned that the proceeds from the transaction, around 5.3 billion pesos, will be used to pay the outstanding loans of Del Monte, mostly owed to the Philippine bank. So no IPO right now, but they have sold their stake to a Singapore investor. Now let's check in on those markets and how our trading is percolating. After it's about an hour and a half into this trading day, we are still hovering around 5,500 here, down 0.7%. Let's take a quick peek at our big movers here. For this Friday, GD Capital up by 4%. They had released also their earnings for the first quarter recently, but you've also got LTG Group up by 0.9%. Another one which actually saw their tobacco sales soaring in the first quarter. But take a look at SM Prime, also one of our bright spots here, but not everyone in the green. Actually, a majority of our holding firms, Aboitiz Equity, leading those declines, down 2.7%, together with Metro Pacific. And I can see here, SM Investments, one of the biggest losers as well, down 1.3%. Now, I just want to take a quick peek at our banks, especially after all of these comments that the central bank governor has given, and also this possibility that they can actually be transferring their NPLs, so those non-performing loans, into asset management companies to restructure them. However, we do see that the banks are not necessarily rallying on the back of this news. The banking space down by 1.3%. Nevertheless, BSP does say they don't see any immediate threat from those bad loans. Earlier, recall that the central bank governor mentioned that the BSP stress test shows that banks can actually absorb non-performing loan ratios of as high as 5%. And currently, we are simply in the neighborhood of 2%. So you can actually see PNB and RCBC, the only two banks in the green right now, with our big guns sliding together with the rest of the local boards. Last quick check on our regional peers here, especially after we saw a bit of a pullback in Wall Street overnight. It's a bit of a mixed picture, trailing towards the red, actually. So we are hovering in terms of the rest of Asia towards the downside. You've got the Topix and the Nikkei 225 sustaining their losses there, down by 0.5%. Over in China and Hong Kong, they're seeing a lot of pain. Look at the Hang Seng, down by 3.5%. Recall that there are a lot of disputes now in terms of the security issues with relation to China, and a lot of focus is on that. China also has a national event coming up today, where they will be making announcements on their economy. So China's indices also in the red this morning. Recall that this follows the S&P 500 dropping by 0.8% overnight, as the US actually released data on the month of May for their manufacturing sector, with that MPI index actually contracting. So that was down, and it is at 39.8 for the PMI index for the US on the month of May. And that's a first look into the business day. Today is Friday, May 22nd, 2020. Catch us again next week 10:30 a.m. Have a great weekend. Thanks for watching. I'm Danny Laurel, and we are One News.